Good day, trader. My name is Waskiu Smart. Welcome to my YouTube channel. The continuation of our series that we are currently on, which is the market, the institutional market structure. So today is episode 5. So before I continue, I would like to do one example on the previous market structure that we look into, which is the short time low, the intermediate time low, and the short time low. So which is called the market mechanism. So that are the previous market structure that we look into. But for today, we are going to look at another thing which is called the proportion block. So how can we merge these proportion blocks with our market structures and all that we want to do? No, most traders actually miss out trade when they don't understand the work and the pattern and the necessity and the valuable aspect that proportion block take in our trade. They most time lose out in trade because they don't know that there is a block or there is a point of interest exists, which is called the proportion block. But for today, we'll be looking at into it. But before I start, I would like to do one example on our previous market structure that we did in episode 1, 2, 3, and 4. But for today's episode 5, let's look. Okay, this is JPP odd. I want you to look at this chart. As I always do, this is my culture, and because this is the way I learn also. No one ever can teach you how the market operates if you don't look at it yourself. So it comes from your belief and understanding. If you see it, you believe it, you understand it, so you can see it next time and you can believe it next time and you can trade it. So believing comes from what you see, what you heard, so you can trade it. So I want you to look at this chart. Just look at this chart and see what you can see. See if you can see what I've been teaching from the previous episode. If you cannot see, it is fine. You just have to study more and look at it more. Study the charts, look at it more, have confidence in it. So just look at this chart right now. Look at it and see if you can see it. Okay, I'm going to put on the notation right now. If you don't pause the video, that's for it. So this is it here. This is everything right here. This is what I do. I see market was bearish. Market was bearish all day longs. You can see the bearishness. But you can see this line here that I'm having right here. This line, this breaking line that I have right here, it is from a higher time frame. It is from an higher time frame order block. So this is a 1 hour order block. So if I check on the 1 hour, you see the order block here. So I drew it out to the day. Then I was expecting market to be bullish when market comes inside of it. So I saw market being bearish. Market was bearish all day. So when market get inside of it here, I saw market goes up. Then market did not break this structure. It is called a failure swing. So I have a short time low here, intermediate time low. Then I was expecting market to break this. Then when market breaks it here, we have what? We have what is called the market structure shift at this level here. So market structure shift, I was expecting market to come into the order block here. I have this block here, I was expecting market to come into it, then for me to be a buyer. The market goes up. Then what I was highlighting here was called an endorsement. So which means that it is a liquidity tap the market maker use to confuse we retail traders. So we usually think that this is a new low. The market makers goes up, then take out the liquidity, then draw into this other block for a buy. So I just wanted you to see, I just wanted to look at it. This is just an example to tell you that the structure or what you have been learning on the market, institutional market structure, is actually real and it works. This is a last week trade. Last week you can see it here, January 30. January 30 was Tuesday last week. So you can be thinking, okay, oh, you can be thinking I just look at the chart and I just draw out things without emotions, and oh, it's very easy like that. Let me show you on my Telegram channel. So you can see the trade there, GPO buy limit. You can see the buy limit. Let me show you. So you can see how everything works before the moves by. You can see how I annotate and I put on the annotation: short time low, intermediate time low, short time low. You can see the order block. You can see my entry. See the endorsement I was talking about, the entry, then for the market to go by. So that is it. And you can see I can the take profit. So you can see the take profit. You can see how perfect it was. Very, very perfect. No, the drawdown was very short. And this is just 41, 40 plus pay. That's 41 here. So that is just an example on our previous market structure. So if you have not put your mind into it, I want you to go and look at the video again. And don't forget to subscribe onto the channel, like it, and tell me what you like, any difficulties you are finding hard. Just put it on the comment section. I'm going to attend to it. So let's go on to this topic. In today's topic now, we're having the proportion block. So we're making use of Euro USD. So making use of Euro USD as our anchor pairs today. So make use of Euro USD, and in Euro USD today, so we make use of Euro USD. So before I start, I want to ask, or like, let me give you a little definition of what a proportion block is. A proportion block is that block that traded into an order block. So whenever you see an order block and you want to trade the order block, and you see a block or a candlestick that traded into it, then you can, okay, let's say for example now we're having a bearish order block here. I'm having a bearish order block. I saw a market breaks. I'm having a bearish order block at this junction here. This is a bearish order block. Then markets come back into it and trade into it. So which means that I'm having this also, because this candle here traded into this. So if I want to classify, and you can check out one thing. Let me show you one thing. Let me put on the annotations. So you can see it here. Market trade into the fair value gap on our market goes down here, and it breaks this structure. I can know that okay, we have a market structure broken. Then where is market coming back into? You should coming back into this other block, right? But there is a block that traded into the other block, which is called a proportion block. So this is a proportion block because of why? Because it traded into the real order block. You can see it traded into it. So when market is going to come back, it's not going to go. Let me draw this out to this. So you can see market did not get there. So if you are waiting for your order block, you actually miss the trade. So there is a proportion block. That is why market will trade down all the way. So hope you understand this gracious no. Let me just try and highlight more and hold on this. So this is what I mean by a proportion block. Let's say, okay, let's say we have this order block here. Market breaks is structured. Okay, let's say before market break is structured, we have another one here. Then market breaks is structure. Then when market breaks is structure, what it is like is that we have market structure broken. We have, this is an order block, right? This is an order block, right? But this traded into it. So which means that I'm going to choose the block over this place. The block here is what I'm going to choose as my representative for order block, which is called a proportion block. It always holds so far it enters inside the order block. So when market is coming back, I want to see market trading into this proportion block for me to be a seller. So that is just the scenarios about proportion block. And I'm going to drop more examples on proportion block. I'll make another short video, drop examples on it, use gold as an example. So today I only make Euro USD as an example. So that is what I'm going to do next, and this is what we are going to be treating for the next or 4 videos. So don't forget to like, share, and subscribe. So I'm going to drop more techniques and more systematic way of proportion block, how you can use them on intraday analysis. So don't forget to like, share, and subscribe. So that is it. Thank you very much.